Welcome to our comprehensive analysis of the global and U.S. real estate markets, where we explore forward-looking investment strategies for 2025 and beyond. This presentation will delve into market trends, investment vehicles, risks, and opportunities across various real estate sectors. Our journey begins with an overview of the market fundamentals, investment landscape, market segments, and strategic outlook. Each section will provide insights into the dynamics shaping the real estate industry today and in the future. In our executive summary, we highlight key trends such as market stabilization, sector divergence, and technology integration. These trends have significant implications for investment strategies, including the importance of ESG considerations and the opportunities in distressed assets. Real estate encompasses various sectors, including residential, commercial, industrial, and land. Each sector serves unique purposes, from housing families to facilitating business operations and production. The real estate value chain involves acquisition, development, investment, management, and sale or exit. Each stage is crucial for maximizing value and involves key stakeholders like investors, developers, and service providers. The global real estate market is projected to reach a value of $613.6 trillion by 2025, with residential real estate making up a significant portion. This sector's vast scale highlights its critical role in the global economy. The U.S. real estate market is poised for growth with a projected 2.9% increase, an inventory rise, and a moderated mortgage rate. These factors contribute to a market value nearing $44.1 trillion, underscoring its economic significance. China and the U.S. lead the global real estate market, but emerging markets like India and Vietnam are showing impressive growth rates, indicating shifting dynamics in global real estate investments. Historically, real estate has shown a steady appreciation rate, despite cyclical volatility. Understanding these patterns helps investors anticipate future market movements and make informed decisions. The real estate transaction volume is expected to remain robust in 2025, with residential and commercial sectors contributing significantly. Despite higher interest rates, the market shows resilience. Housing supply is on the rise, providing more options for buyers, yet inventory remains below historical norms. This trend highlights the ongoing challenges and opportunities in the housing market. Current housing demand is influenced by factors like affordability constraints, rental migration, and pent-up demand. These dynamics shape the market and present both challenges and opportunities for stakeholders. Home prices are expected to appreciate modestly in 2025, with regional variations. The luxury segment may see larger adjustments, while entry-level homes face supply constraints. Regional markets like San Francisco and New York lead in home prices, but emerging markets offer attractive investment opportunities. Understanding these dynamics is key for strategic investment decisions. Mortgage rates are stabilizing, with lenders tightening standards. This trend affects first-time buyers and highlights the importance of understanding financing options in real estate investments. Policy shifts, such as changes in mortgage interest deductions and zoning reforms, are reshaping the real estate landscape. These changes present both challenges and opportunities for investors and developers. Private equity and pension funds dominate real estate investment flows, reflecting a strong institutional interest in the sector. This trend underscores the importance of strategic capital allocation. Foreign investment in U.S. real estate is influenced by geopolitical factors and tax implications. Canadian and Middle Eastern funds are significant players, highlighting the global nature of real estate investments. Real estate investment types vary, each with its pros and cons. Understanding these differences helps investors align their strategies with market opportunities and risks. In the residential sector, key price drivers include interest rates, local economics, and supply constraints. These factors, along with demographic trends, shape the market and influence investment decisions. The commercial real estate sector is navigating through significant changes, with office spaces adapting to remote work trends, retail evolving with experiential concepts, hospitality recovering from the pandemic, and multifamily housing facing affordability challenges. Despite these shifts, office space surpluses in major U.S. cities are expected to persist, with a substantial increase in square footage by 2025. The rise of e-commerce has dramatically transformed industrial and logistics spaces, with online retail requiring 3 times the warehouse space of traditional retail. This has led to a surge in demand for last-mile delivery centers, which are now crucial in urban areas. Despite this growth, vacancy rates remain historically low, indicating a robust market. Land development is diversifying, with raw land, agricultural entitled, master planned, and infill development each offering unique opportunities. Zoning reforms in 2025 are expected to open new avenues for residential development, particularly in high-demand coastal markets. Vacation and second home markets are experiencing significant shifts, with increased demand in desirable locations and regulatory scrutiny on short-term rentals. By 2025, these markets are expected to stabilize with more selective buyer behavior, influenced by regulatory changes and market dynamics. Understanding real estate investment fundamentals is crucial, with key metrics like cap rate, IRR, cash on cash, and rent versus buy ratios guiding investment decisions. These metrics help investors assess property value, cash flow, and investment potential. Diversifying portfolios with real estate can offer moderate correlation to equities and higher yields than fixed income. Strategic allocation includes REITs, direct real estate, and commodities, providing liquidity and diversification benefits. Major players in the real estate market include global investors, top home builders, and multifamily leaders, each contributing significantly to the industry's landscape. Their investments and developments shape market trends and opportunities. Urbanization is a key growth driver for real estate, with smart city initiatives and mixed-use developments reshaping urban environments. By 2050, a significant portion of the global population will live in urban areas, driving demand for diverse real estate solutions. Demographic shifts such as the millennial housing wave and baby boomer transitions are influencing the real estate market. These changes are reshaping housing demand and preferences, with implications for future development and investment strategies. Economic growth is closely linked to real estate demand, with residential and commercial sectors showing varying correlations to GDP. The rise of remote work and changing consumer spending patterns are adding complexity to this relationship. Technological advancements are revolutionizing property innovation, with virtual tours, AI-powered analytics, and blockchain enhancing real estate transactions and management. These innovations are streamlining processes and improving investment opportunities. Sustainability is becoming integral to real estate, with ESG considerations and green premiums influencing investment decisions. Energy-efficient buildings are commanding higher rents, while brown discounts highlight the need for sustainable practices. Short sales and distressed asset dynamics are evolving, with banks handling non-performing loans more efficiently. Despite slower than expected progress, opportunity funds are targeting distressed assets, anticipating significant growth by 2025. Understanding leasehold versus freehold tenure is essential for real estate investments, with each offering different rights and obligations. These tenures impact property value and investment strategies, particularly in international markets. Real estate tax considerations, including capital gains treatment, depreciation benefits, and 1031 exchanges, are crucial for investors. These factors influence investment decisions and potential returns, varying significantly by jurisdiction. Real estate serves as an effective hedge against inflation, with property values adjusting to economic changes. However, not all property types respond equally, with multifamily and hospitality assets showing varying levels of inflation sensitivity. Interest rate sensitivities affect real estate markets, with mortgage rates, property values, and federal policy outlooks influencing investment decisions. Understanding these factors is crucial for navigating rising rate environments. Rent growth and yields are experiencing significant variation across property types, with multifamily and industrial sectors showing strong performance. This trend reflects changing market dynamics and affordability challenges. Macro risks in real estate, such as recession, interest rate, policy, climate, and liquidity risks, are critical considerations for investors. These risks can significantly impact property values and investment strategies. Asset-level risks, including vacancy rates, obsolescence, tenant concentration, and environmental issues, are important for property-specific investment decisions. These factors can influence property performance and investment outcomes. Real estate fraud is a significant concern, with wire transfer fraud being the most common. It involves intercepting closing instructions and redirecting funds to fraudulent accounts, leading to substantial losses. Title and deed fraudsters forge documents to transfer ownership, often leaving homeowners vulnerable. AML and KYC requirements are crucial to prevent money laundering and know your customer regulations, with non-compliance penalties reaching up to $1 million. Vigilance through verification channels and fraud alerts is essential to combat these threats. Conducting due diligence is vital in real estate transactions, encompassing both physical and financial aspects. Physical due diligence includes property condition assessments, environmental site assessments, and zoning compliance. Financial and legal due diligence involves title searches, insurance reviews, and operating expense analysis. A comprehensive process typically requires 60 days for residential properties and 90 days for commercial assets, ensuring all potential risks are evaluated. Analyzing a real estate deal involves several critical steps. Location analysis evaluates neighborhood trends and proximity to amenities. Risk assessment identifies property-specific risks and regulatory concerns. Financial modeling develops detailed income projections and calculates key metrics. Exit strategy planning defines multiple scenarios, considering market conditions and potential buyers. Each step is crucial for making informed investment decisions. Real estate data analytics is transforming the industry, with AI and machine learning predicting market trends with increasing accuracy. Analytics platforms provide comprehensive data on properties and market conditions, aiding investors and developers. Geospatial analytics use location intelligence to map demographic and economic data, identifying investment opportunities. These tools are essential for making data-driven decisions in real estate. The home building industry is experiencing significant trends, with new homes for sale reaching record levels. Speculative building has increased, driven by historical averages and buyer demand. Home builder strategies include smaller floor plans for affordability and increased focus on entry-level homes. Build-to-rent communities are also targeting institutional investors, reflecting the evolving landscape of home building. The global housing affordability crisis is evident in major cities like San Francisco, London, Sydney, and Hong Kong, where price-to-income ratios are alarmingly high. Policy initiatives aim to address affordability through zoning requirements and subsidies. These efforts are crucial for ensuring access to housing for low and middle-income households, highlighting the need for effective strategies to combat this crisis. Remote work is disrupting office markets, with hybrid work arrangements becoming the norm. By 2025, average office attendance is expected to stabilize, impacting vacancy rates. The market is bifurcating, with Class B and C properties facing severe challenges. Flexible office providers are expanding, offering more adaptable solutions. This shift is reshaping demand patterns and requires innovative approaches to office space utilization. Retail space is evolving in the digital era, with experiential retail and omni-channel integration leading the way. Adaptive reuse repurposes obsolete retail spaces for new purposes, while last-mile logistics focus on rapid delivery. These trends reflect the changing nature of retail, emphasizing the need for innovative strategies to meet consumer demands and enhance shopping experiences. The hospitality sector is recovering post-pandemic, with metrics exceeding pre-2019 levels. Strong leisure demand and corporate travel are driving this recovery, with top hotel investment markets like Nashville and Phoenix showing favorable demographics. The industry is adapting to new trends, focusing on unique experiences and sustainable practices to attract travelers and investors alike. Real estate cycle timing is crucial for investment strategies, with phases like recovery, expansion, recession, and hypersupply. Each phase presents unique opportunities and challenges, requiring careful analysis and strategic planning. As of 2025, industrial and multifamily sectors are largely in expansion, highlighting the importance of timing in real estate investments. Raleigh-Durham, Nashville, Austin, and Phoenix are top-performing markets in 2025, each offering unique advantages. Strong employment growth, favorable demographics, and strategic location are key drivers. These markets are attracting investors with promising returns, emphasizing the importance of understanding local dynamics and trends for successful real estate investments. San Francisco, San Jose, Los Angeles, and other major cities are among the most expensive metro areas for real estate. Factors like supply constraints, economic specialization, and international demand drive these premiums. Understanding these dynamics is essential for investors looking to navigate these high-cost markets effectively. New investors have various entry points into real estate, including REITs, crowdfunding, syndications, and direct ownership. Each option offers unique benefits and challenges, from liquidity and tax advantages to management responsibilities. Understanding these entry points is crucial for investors seeking to align their investment strategies with their financial goals and risk tolerance. Real estate investment trusts, REITs, offer diverse opportunities, with public traded, non-traded, and private REITs each presenting unique advantages. REITs must distribute a significant portion of taxable income to shareholders, providing higher dividend yields. Understanding the structure and benefits of REITs is essential for investors looking to diversify their portfolios and maximize returns. Cross-border real estate investment offers lucrative opportunities, with countries like Turkey, Colombia, and the Philippines providing high-yield markets. Appreciation leaders like Portugal and Mexico offer strong growth potential, while tax-advantaged regimes in Singapore and Monaco attract foreign investors. Navigating these opportunities requires understanding local regulations and market dynamics. Real estate marketing is evolving with immersive digital listings, algorithmic pricing, and influencer marketing. These strategies leverage technology to enhance buyer experiences and optimize pricing. By 2025, most listings will incorporate virtual tours and drone footage, reflecting the industry's shift towards innovative marketing approaches to attract and engage potential buyers. Sustainability presents future opportunities in real estate, with green building transformations and carbon reporting requirements leading the way. Energy-efficient retrofits and regulatory frameworks are driving these changes, emphasizing the need for sustainable practices. Investors and developers must adapt to these trends to meet market demands and regulatory standards. A real estate professional team includes brokers, agents, legal experts, financial professionals, and property services. Each role is crucial for successful transactions, from negotiating deals to managing finances and ensuring compliance. Understanding the functions and responsibilities of each team member is essential for navigating the complexities of real estate. Real estate trends through 2030 include urban reconfiguration, housing reinvention, climate adaptation, and emerging asset classes. Cities will evolve with mixed-use developments, while alternative housing models gain traction. Climate adaptation will incorporate resilience features, and new asset classes like life science real estate will emerge. These trends highlight the dynamic nature of real estate and the need for strategic foresight. The conclusion highlights key takeaways from Real Estate Insights, emphasizing foundational asset class importance, modest return environments, technology-driven transformation, and critical analysis requirements. Success in real estate demands understanding market dynamics, leveraging technology, and executing strategic planning. These insights provide a roadmap for navigating the evolving landscape of real estate investments.